Hi, it's Rick again with Coldwell Banker. I'm here with Wade Betts, my amazing loan officer. We wanted to address a certain preconceived notion that a lot of families have these days about the interest rates are quote-unquote high. Well, if someone's worldview says that the world started 5 years ago, then I can understand that. But one has to understand that historically, interest rates have been infinitely higher than what they are even today. I mean, when I started buying investment properties, I was lucky to get 9.5%. I was happy to get 9.5%. So these interest rates are not normal. And if you go back far enough, if you have a long-term view, in the 80s, the interest rates were in the teens, 15, 17%.
Easily. Easily. Yeah, so it's just a different world that we live in these days. So what drives interest rates is inflation data. So the worse inflation got, the bond market hates inflation, and it drove up the cost of borrowing very, very rapidly, and the Federal Reserve is stepping in to try to tame inflation, and it's a slow process, but as they get there, rates will come back down. So for historical perspective, rates are not high whatsoever. It's just that in the lens of the last few years, they're double what they were. But double still doesn't mean high. Yes, some families will have sticker shock from it, but the reality is if the stated inflation rate, let's just say is 8%.
8.7, whatever.
Yeah.
It came down a little according to the last report.
Exactly. So the fact is, if the stated inflation rate is up over 8%, and we all know that the government's
They underreport that.
understate what the real world impact is, just a little bit. So my point though is that if the inflation rate is above where you can get a 30-year fixed rate mortgage, that is an absolute gift.
It's an interest-free loan.
It's an interest-free loan. So your after inflation real world interest rate is negative. So you are literally making money by having your mortgage financed at the current terms. Now, you don't want to be in that mortgage forever, and no one's saying that you'll have to be, but if you can find a home that meets your family's needs that you love, you're comfortable with the payment, it's only a matter of time before the inflation data gets better and better and long-term interest rates come crashing down, and we end up being able to refinance you into your forever mortgage. So you might have heard the phrase, marry the home, date the rate, divorce the rent if you're renting, okay?
I didn't hear that third one. I like that.
Yeah,
I'm stealing
divorce the rent. There we go. But the fact is, rates are not high. Now, I'll give you a little parable. I've been at this since 2006. Right when I started in this industry, we moved to a new office and we had to set our alarm code for the office. And we chose 6875 because that's what the 30-year fixed rate was that exact day. And rates are lower than that right now. Okay, now rates change throughout the day every day, so essentially it'll be different by the time you're watching this, but rates are not high. They're only high in the lens of the very recent past.
And you're able to deduct that mortgage interest off of your taxes through home ownership. And everyone's heard the old story about you can own for a lot less than rent. Mm-hmm. So that's just something to address one of the misconceptions that are out there, and I'd hope to work with you further. Please call us and we can talk. Again, it's Rick Baker with Coldwell Banker and Wade Betts, loan officer extraordinaire.
There we go.
Thank you.